What's up, Crypto Junkies? It's Jay, and I'm actually introducing a training that was done by one of our community members, Royal, who's actually a part of the Haasonline trading software. He's been a big part of the community, always helping out in the trading floor and the boiler room and all the sections where people are using the bot, and he's providing support there as well as people are trading. He himself is a day trader, so naturally he's attracted to it, and this is the stuff that he loves. So the video that I'm about to introduce to you is where Royal will go through what we call the Bollinger Band Binance hustle. Now, all this is it's a very simple day trading strategy that can get you a little 3, 4, 5% tick on quick little in and out trades. Yes, as you guessed it, we're going to be trading and basing things off the Bollinger Bands. Myself and Justin, another community member, actually shot a video talking about this same exact thing. This is the full A to Z that you're about to watch with Royal inside Binance, exactly where they do it, going through live scenarios, executing trades live for you, my friends. So without further ado, I'm gonna go ahead and let Royal take it away and walk you through step by step the Bollinger Band Binance hustle. Let's go.
All right, everyone, welcome to the Haasonline quick day trading lesson. We've been doing this a few times and a lot of people seem to react. It seems to be having a lot of positive movement. So we're going to go ahead, we're going to run it again. We've already done this about 5 or 6 times and figured why not record. This series is brought to you by, or should I say these 2 lessons, or one long lesson, was brought to you by Haasonline. If you don't know who I am, I'm Ronaldo Rivera. I'm the Chief Communication Officer for Haasonline. My job is essentially to talk, make partnerships, make sure our partnerships go well, and apparently on the off time, teach a little day trading because it's enjoyable. If you're not familiar with what we do, we're Haasonline. We create automated day trading software for cryptocurrencies. So you can pretty much connect our bot to an exchange, set its parameters, and have it trade for you 24/7. So if you're interested in that, check it out and you might be impressed. Now, it's important to note that you cannot just fire and forget this bot. This bot does require you to have some understanding of trading, indicators, trend lines, etc., which is why we're having a bit of this discussion. So, like I said, we're from Haasonline, and we are currently partnered with, or should I say, we're sponsoring a series with the Crypto Junkies community. So that's kind of why we're here. We're here to show the other side of crypto. You know, there's a lot of the BitConnects, the haasbot, etc. We're the other side. We're aimed at the day traders, the people who are actively doing swing trades, day trades, long-term investments, or in our case, in our field, automated trading. That's where we specialize in. So if you haven't already, check it out. And yeah, like I said, all of this is sponsored by Haas right now in conjunction with Crypto Junkies. So before we begin, there's a few things we need to know. I'm not going to cover how to buy Bitcoin. You should already know how to do that. If you don't, I am more than sure someone in the community is more than willing to go ahead and help you do that. And I imagine an affiliate link or 2 will go by. The next thing is we are not going to get extremely technical with what the indicators are or how they're generated. What we're going to focus on is more on how to use them. Because, you know, a lot of people when they begin, they get caught up in the why does this do this thing rather than just how can we use it at the time. Now, granted, you are going to want to eventually look further and understand how they're completely being generated, why they work, you know, what data is actually being used to generate them. And all this is going to be important. But when you're trying to learn, it becomes overwhelming. So what we're going to try to do is narrow it down a bit, bring it to a easy to understand way so you can actively begin trading and be a bit confident about how it's going. So now that we got the pleasantries out of the way, let's talk about the exchange. Now, we are going to be on Binance. There's a few reasons we're on Binance, and we're going to cover them right now. First off, Binance is a very solid exchange, and I know this is going to sound like I'm shilling, but from our experience in the last couple of days, Binance was one of the only exchanges that didn't go down. It had fluid uptime, and we were able to make all of our trades without a hitch. It has a promotion, although sadly ended yesterday, where BNB trade fees were free. Or actually, I think it got extended to the 13th. We can check. But basically, any BNB pairs, so BNB Power, BNB EOS, are free. You're free to trade on those pairs, meaning you don't pay a trade fee. Another reason is the trade fees are relatively low. If you're trading on Binance, normally it's 0.1%, which is really good compared to 0.2 or 0.25 or higher. Another reason is if you pay your fees in BNB, then your trade fees are cut in half. So now instead of paying 0.1%, you're actually paying 0.5%. 0.05% of your transaction. There's a lot of reasons we want to be using Binance compared to another exchange. And the other reason is most of the tools that we have in place, or what most of the tools we're using, are already built into the charting software that Binance currently has on their platform. So it kind of just, it's a good area for a person who's new to trading to come in and get started. So once you've created your account, if you haven't already heard, please join through someone's affiliate link, whether my own or someone else's. That way, the way Binance's affiliate links work is 50% of trade fees go to the person who you signed up under. Keep the money in the community, everything goes well. And finally, to move money, or should I say, once you log into your Binance account, you're going to see this screen we have right here. Very simple. The most important things to know are funds. So if you want to deposit money into Binance, just go to funds, deposit, and withdrawals, and it should be pretty straightforward from there. If you're trying to find your affiliate link, just click here, account. There'll be a big banner that says affiliate program. So let's get a bit started. When you want to get to the exchange, there's two options available. There's the basic and the advanced version. And for our purposes, we're going to use the advanced version. So if we come up here in the top left, click advanced, there we go. So once we open it, it'll be probably on the last pair we were looking at, and this is what we'll see. For a newcomer, don't worry, it looks a lot more complicated than it actually is. Right here in our main center area, we have our price chart. It's showing the candlesticks showing, opening and closing price if it was moving down or up. Not going to get into how to read these. You should be able to find this fairly quickly. Down here, we have our actual indicators, and these indicators will change based on what we select, which are found up here. You have your open orders, order history, trade history, and your current fund. So if you're trying to see what amount of coins you have in any given exchange. Over here on the right, you'll actually see our order book. These are orders currently placed on the order book, the buys and the sells appropriate, and the amounts and the total value of that amount. On the far right, you actually see your order history. These are completed transactions. So someone bought 0.25 BTC at 10,742. At the bottom right, you actually see the ability to buy and sell, and the price and the amount, along with the easy to use, quick 25%, 50, 75, 100%. And this is for your total amount of the pair. If you want to do a market order, you can do this and buy in. So before we continue, let's explain real quick what a difference between a limit order and a market order is. A limit order is when you want to place an order on the order book. So for example, let's say I want to buy 10715. I can click that, say I want to buy 5 BTC and hit buy. And what will happen is our order will actually end up on the order book, and we'll see it there at 1071502, and it will show 5 BTC want to buy at that price. Easy enough. Now what that means is we have to wait for the price to come down to our buy-in point and then hope it gets filled, meaning someone wants to buy at that price. Yeah, same goes vice versa for selling. So we're hoping the price moves up, that someone wants to buy at our price. Pretty simple, right? I think I might have set that wrong. So buy, you need the price to come down. Yeah. So if you want to buy, you need to wait for the selling price to come down so you can buy at the price you want. And if you want to buy, you have to, or if you want to sell, you have to wait for someone to buy your price. There we go. That's the correct way to say it. If we want to do a market order, now a market order is an instant transaction. That means you're telling the trade engine you want to buy this amount now. Unlike other exchanges where a market order costs a different amount. So for example, on GDAX, limit orders are generally free if they're using the post-only flag, but market orders cost a certain percentage. Well, because the way Binance is, it's always 0.1%. So how does a market order work? Why wouldn't we always use a market order? Well, there's a thing called the spread, and the spread is the difference between the current buy and the current sell price that is on the exchange. For example, if I wanted to, let's say, buy 10 BTC on market order, so if we put 10 here and we hit buy, what's going to happen is the trade engine, it needs to fill 10 BTC. What it's going to do is it's going to look for sellers, and it's going to say, okay, I'm going to buy 0.1 at this price, 0.5 at this price, 0.09 at this price, 1 at this price, so on and so forth until it fills your 10 BTC order. This is called slippage. And this is why when you're doing big orders or there's a lot of spread or the price is moving, we want to kind of be very careful when we use our market orders, because what will happen is we end up selling either down or, our selling price ends up wrong, right? Because I keep getting these backwards. I'm sorry. If we're buying, we might not get to buy at this low price. We might end up buying here, 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 all the way up to where we end up buying at 10,854, which is, a fair distance from the price we were actually looking at buying at. And that's considered slippage. And the same vice versa for selling. If we're trying to sell 10 BTC, we might end up, selling here, and we end up selling, we could end up selling 10 BTC and the last order goes in for $10,500, which is 200 away from the current sell or current buy price. So important to note that slippage does exist, and when you're executing orders with a large spread or when the market's moving quickly, that it can happen. And that's kind of why, pick and choose your battles. There's no right or wrong way to do this, but if you're guessing on your price or you have a good, your TA shows a set price, it's going to hit. You can put your order in, wait. Now let's explain a bit about what we call chasing. Chasing the price is when you're trying to get your limit order in and you keep moving. So for example, let's say the price is in an uptrend, meaning moving up, and we're trying to get filled. We keep going, we put it at 10,675. Some order ends up above us for much more. So then we move it higher. They move it higher, we move it higher. And then suddenly we're buying way higher than we ever wanted to begin with because we ended up chasing the price. This is also very familiar for those who understand FOMO, which is fear of missing out. So with these large spikes, what will end up happening is they'll see it spike and they're like, oh man, I want to get in on the action. They'll put their buy order here and it will keep going up. And then they have to put it up here and then they'll keep going. And then finally they're like, yes, I filled. And now they're going down and now they've lost money. It's important to keep the FOMO in check. The idea of trading using these indicators, TA, trend lines, etc., relies heavily on making sure that we set our points, our buy and sell points ahead of time. We're not chasing. We're not seeing the market drop and trying to get filled on the sell on the way down. We have our targets. Let's talk about strategy. Now, there's two ways that we're going to cover in this session, and unfortunately, it's going to be a long session because it takes a bit of time to explain a bit, or to explain some of the finer details, especially on the second half. So the first half, what we're going to do is we're going to cover a simple scalping strategy using a few indicators to find out when to enter and exit a trade. Now, it's important to note that this strategy, we'll just call it, internally, we're calling it MadHatter because we're Haasonline's trying to create a bot that trades on this strategy. We're pretty close and we think you guys will really like it in the future. But the idea is that we might not be able to fully map out with trend lines. Let's say we want to get in and out, we're playing the quick price movements within a certain time frame. So what we can do is, rather than try to do the long swing trades, which are over the course of a few hours, or should I say 5, 6, 7, 8 hours, we can do this. You can use the strategy to enter trades that will take maybe an hour to 2 hours. That means we can do a lot more trades in a day to get the same type of percentage we would for the longer swing trades. It's important to note that in order for us to utilize the strategy, Bitcoin cannot be in an uptrend or in a strong downtrend. So if you've been part of the community and you've been trading with us, this strategy hasn't been used for about the last 4 days because it's hard to use it when you can't account for. Bitcoin's taking a rising up, alts are bleeding. Bitcoin's crashing, alts are bleeding. If you're not familiar with what that means that people are moving the money out of alt into Bitcoin, or moving all the Bitcoin money into a particular, BCH or Dash, whatever their current safe haven is. So in order for this to work, we'll just say in order for the MadHatter to work, we need to make sure Bitcoin's not moving crazily. That means we kind of want it to be just, it's standard $60, $70 movement, maybe $100 here or there, but not a 200, 300, 400 in the span of a couple hours, because then we can't use this strategy to accurately predict what's going on. Okay, so first things first. If it looks like this is a line graph. It's useful for certain people, but for me, I prefer, seeing candlesticks. To do that, in the top left, we hit minutes, go to 5 minutes. Why are we trading on the 5 minutes? We want to be in and out of our trade within, with the shortest amount of time possible. The goal of this is to enter multiple scalping trades over the course of the day. We don't want to enter one, 2, or 3 long-term trades and wait for tomorrow to settle. We want to enter a trade, exit a trade, enter a trade, exit a trade, and then hopefully have 5, 6, 7, 8 good trades in a day. So to do that, we actually use our 5-minute scale. Another reason we're using our 5-minute scale is because we can actually use one of the indicators to make the quick movements. The strategy is looking for anywhere from 1 to 10% movement, meaning 1 to 10% gain, with a target goal of 3%. If we get above 3%, we start moving our stop loss. What's a stop loss? We'll get to that. Let's just talk about our strategy. What we want to do at the beginning, we're going to clear these 2 indicators. So clear that. And what we want to do is click indicator, and we're going to add our MACD and our Bollinger Bands. Now, for the life of me, I cannot remember what the MACD acronym is, so I will just keep calling it MACD. And we have our Bollinger Bands, which are these 3 blue lines here. Now, if you remember at the beginning of this video, I said I'm not going to get too into how they're forming or what the math is behind them. All we're going to cover is how to use them currently to trade, because that's the key. We want to get you guys trading, and then as we move forward, we can start learning the more intricacies on it. And thank you for chat. Moving average, convergence, divergence. Thank you, guys. So how do we use it? Well, let's talk about our primary indicator. Now, the way this strategy works is we have a primary indicator and then we have confirmations. And our confirmations just help, solidify the action or the position we're about to take. So our primary indicator is going to be the Bollinger Band. Our first confirmation is going to be our MACD. Our second confirmation is going to be our RSI. And our final confirmation is going to be our volume. Now, the way we're looking at volume is actually a combination of the volume graph, the current order book. We're going to look for some buy walls at resistance points we expect to see, and a little bit of the actual order history. So think about, normally when people say volume, they're strictly talking about this lower graph here. In this strategy, when we talk about volume, it's everything: the order book, order history, and our volume chart. So let's begin. We're going to start with our primary indicator, the Bollinger Band. Now, it's important to note there is 3 lines. We got the upper Bollinger Band, the middle Bollinger Band, and the lower Bollinger Band. And you might hear the terms resistance and support. Now, the lines actually change based on which direction we're going. So if we're heading upwards, the bottom line is considered our support line, the middle line is considered resistance, and the top line is considered resistance. But if we're moving down, then we have our middle line becoming support and our bottom line becoming support. So depending on the direction depends on how we call and what we look for when we're trying to talk to somebody. When we're saying we're testing the middle Bollinger Band resistance, that means we're in an uptrend, we're moving upwards, and we have resistance here. Because generally what you'll see is when you look at each one of these lines in the order book, you will see buy support or sell, or a lot of sell walls. What's a sell wall? A sell wall is a large order at a certain point of resistance. So when we start looking at bit of the swing trading, we can see where sell walls line up with our TA. And in this case, we'll see where our sell walls line up with our Bollinger Bands. So what are we looking for? What are we looking to do? In order to use our primary indicator, we're looking for a set pattern. Why are we looking for a pattern? Because it's easier to predict movement when we have something we've seen before. So let me look around here for the pattern we are looking for. BTC might not be the best choice because, here we go, we'll use this one. What does our strategy rely on? Our strategy actually relies on bouncing off the lower Bollinger Band. That is the bottom one down here. The ideal situation of what we're looking for is a move up to the top of the Bollinger Band, coming down past the middle resistance point, a test, and then coming right back down and bouncing off the lower Bollinger Band. This is what our strategy is looking for. Now, we can have some variation in the fact that we come up, touch our top Bollinger Band, and come down and then touch our bottom Bollinger Band and bounce. So why do we do that? The reason we're doing that is because we're actually trying to utilize the support that's going to be built around these indicators. And the reason there's support around these indicators is because people trade on them. Self-fulfilling prophecies. People trade on Bollinger Bands, therefore resistance will be at the specific Bollinger Band. What we're looking for is, we bounce off the top here, come back down, touch the bottom Bollinger Band, and then that's when we take our profit. How do we do that? So what we're looking for is it comes down, we pierce the bottom Bollinger Band, and then we start moving back up. Once we move back up, what we're waiting for is what we like to call our confirmation, which is our confirmation candle that we're going to start moving upwards. Nothing's perfect, right? Nothing's perfect. But the more confirmations we can get, the better chances of the correct movement occurring. So we come down here, we bounce here. Now we're waiting for entry. We're watching. And it looks like, okay, this candle is going to end up green. We'll have variance in here, and then boom, we can lock in our buy-in price around here. Now, some people will buy in over here. Some people wait for confirmation. That's highly dependent on your risk levels, what you're willing to take. And then what we do is we'll look at our chart, which I will show you what this spreadsheet made by John Perkins from the community. He made it to help us with this strategy. I'll show you how to actually pick your sell targets. And what we're looking for is percentage. Every trade we're going to execute is always based on percentage. We're using percentages because it's easier to track and it lets you see how you're performing overall. And once you get used to trading, small amounts using percentages, you'll actually be able to trade larger amounts because it's still just a percentage to you. So for example, if you're trading $100 and you lose 2%, you lost $2. If you're trading $100,000 and you lose 2%, you're losing a fair chunk. But by the time you're at that point, it's only 2%. It's not the end of the world. And the reason we want to go that route is because as you're trading, you're going to get a lot of emotions. And for new traders, that's the hardest part. And that's the reason most new traders are going to lose their money, is because they get emotional. They can't handle watching the loss, or they get very scared and they need to close their trade because they've made $50, when in reality, they can make so much more if they just have an exit strategy, have something they're willing to stick to. And that's why we want to make sure we have these targets, and I'll explain those in a little bit. But yeah, so what we're looking for is our buy-in, movement up to our current percentages. So 1%, I'm making guesses, 1% here, 2% here, 3% middle, 4, 5, so on and so forth. And then you close. Now, for some people, 3%, whatever. Well, when you remember in Forex land, they're generally going for 1%, and you're closing trades at 3%, and you're doing a lot of them over time, that makes a huge difference on your portfolio. And the whole goal is to make your portfolio bigger. So don't be dissuaded on, it's only a 3% gain. Everybody's making 15% gains on their trades when they're doing swing trading. Sure, but I bet I can get multiple 3% trades in the same amount of time they're making a single trade. And there's chances are I can get more. So that's how we're going to use our Bollinger Band. We're using it for bouncing, setting our buy-ins, checking to see movement, and then knowing when to sell. And you might look at this and you're like, okay, what are these, right? The shadows of the candlesticks. We consider this piercing. So this is when you hear someone say it's pierced the bottom Bollinger Band, what they mean is that we came down, we went under it, but we didn't close under it, meaning we didn't have an entire candle form under the Bollinger Band. Same with the upward movement. We pierced the top band, but we didn't confirm above it. And that's what we're going to do. We're going to find this setup. We're going to trade it. Boom, let's say we sold here. We're just going to let it ride. It's fine, because we're not going to just trade this pair exclusively. We're going to trade it, take our profit, close the graph, open up another graph, because this isn't going to be set up. We're going to wait for it to be ideal again. So don't worry. There is a lot of different ways to identify this. So let's say right here, let's use this for example. We're still talking about Bollinger Bands. We come up here, we pierce the top, we come down, we touch the bottom, and right here, if we're looking at our strategy, that's a good way to buy in. But then what happens? It closed below. We missed our confirmation candle. This should be enough to let us know to close. But if it isn't, we have stop loss targets. Stop loss is a percentage of loss we're willing to take before we close our trade. We set a specific amount or specific percentage, everything's percentage of we'll consider it, which is our 1%, and our 2% is the absolute we're closing. Like I said, we'll get into that in a little bit. And what we can do is, we see this, we close here, we wait, and buy back in. We say we're sideways, we sell, wait, buy back in, so on and so forth. It's like, okay, Bollinger Bands seem easy. I'm just looking for it to touch the bottom, sell at the top. What's the problem? Well, the problem is for situations like this, Bollinger Bands can't tell us when this is going to occur. Most things can't, but what if we can have a little bit extra hint? What if there was something that told us a bit like, hey, you know what? It's really not a really good time to buy in at that Bollinger Band. That's where our first confirmation indicator comes in, our MACD. So we're going to shift gears. That's our Bollinger Bands, and let's come down to our MACD. Now, our MACD is actually a lot simpler to use than you think, but it's important to note it's what is considered a delayed indicator. What that means is that it needs to have data before it will update itself. Unlike Bollinger Band, where it kind of gives us a little bit of a prediction on where we're moving. So like if we look over here at the end, we can see, okay, we're on our way up to the top Bollinger Band. Well, unlike the Bollinger Band, which has a predefined, MACD is extremely delayed. We need to have that data before we can see some extra movement. Now, I know there's people who will watch this and be like, well, Bollinger Band's delayed also. But what we mean by delayed in this case is when it actually updates that there's a change in movement. So I got a little ahead of myself. What is MACD used for? We use the MACD to indicate a change in the direction of the market. So if we're going down, we use our MACD to kind of give us confirmation that, we're actually moving upwards now. That's what we're using it for, to try to see, you know what, we're moving down, but MACD's converging. What does that mean? So if you'll see down here in this chart, we have a purple and orange line. And what we're going to use these for is to look for moments when they start coming in on each other. So you can see right here at this bottom where my little cursor crosshair is, it started moving upwards. And then we can see, if we look at our chart, we actually have green candles forming. And what we can do is, it's like, okay, we touch the bottom Bollinger Band, MACD starting to close in on itself. We have a confirmation that the market should be shifting upwards. Nothing's certain, but the more should-bes we can get, the more we're moving in the other direction, it's better for us. So we see here, our MACD is saying, okay, we're moving in. We've been over the top Bollinger Band. We probably bought in right around here. Then we head up, we're excited, comes back down, and then we have another candle that's right above it. It's like, okay, well, are we still okay? So we look at our MACD, we see that it's coming in on each other, coming in on itself, meaning the orange and purple band are coming in towards each other. And then, we can see that the cross happens. So what's delayed about it? Well, what's delayed about it is you'll notice this cross doesn't happen until we've already started moving up. If we waited for this MACD to cross to buy in, we're only going to clear maybe 1% profit. Now, this is a more extreme case, but let's say it came back down here. We're not clearing as much, and we actually our risk increases because we're buying at the top of the Bollinger Band. So what we want to do is we want to actually use the movement towards each other, and then once we cross, that's a good confirmation that we changed directions, which we already see in our graph. So very simple. We can also use it moving downwards. We can see when we were in an uptrend and we start coming down. We'll notice like right here, although MACD is still in the green with green volume going down. So if you notice right here, when we start moving down, our MACD, it's very hard to see, starts coming in on each other. The orange and yellow line start moving in towards each other, but we're still green. We can look at our charts, the price starts moving down, and then finally we cross, but we're already in this candle right here, which has already had a substantial move down for this strategy. So that's how we're going to use MACD's delayed, so we can't count on the crosses, but we can use the convergence or the two lines coming in on each other to kind of give us an idea of when the change in the market's going to happen. Simple enough. So you're like, okay, we have an idea of what the Bollinger Bands are. We have an idea of what the RSI or the MACD is. What about RSI? We're going to switch over to the RSI, which is just under indicators, hit RSI, and let's talk about what this shows. RSI is a simple indicator which has 3 points, 30, 50, 70. It might be different on different exchanges on what their default settings are. And it shows where we either are overbought, meaning the price has gone too high, people have bought too many coins and it needs to come down, or oversold, meaning that the price has been, people sold so much, we need to be moving up. How do we identify that? 50 is the flat line. And you'll notice that when RSI is 50, there isn't large price movements. So like right here is a good example. We're kind of in this sideways movement. And if you look at RSI, it is also in the sideways movement. However, if you look down here, right at these two arrows or these two candlesticks, you'll notice that we actually dip below. We're below the 30 point, which means we are not only oversold, we're pretty much banking on we're the extreme. Like we are really oversold. And then what we'll notice is the price starts moving back up, comes back down, which comes down to sell. We can notice we're getting close in our 30% again, or our 30 mark, and then we start moving back up to 50. So how do we know when it's the opposite? We just look at our RSI over here, and we'll notice that the RSI line crosses the 70, means we are overbought. Our price is too high, we need to be moving down. And then you'll notice that sure enough it does. Right here at the 70, we start coming down. So you're probably saying, well, why don't I just trade on RSI? It's not the most reliable of things. That's kind of, I don't really have a better explanation than there are times where the RSI will be screaming overbought, but the price is rising rapidly and nothing changes. It just keeps going. And you're like, but I sold and the price is still going up. Then RSI, it says we should have been going down a long time ago. That's why we just use it as a confirmation. Nothing's for certain, but the more indicators we can use to tell us the direction that's supposed to happen, the more confidence we can have in place in our trade. Okay, so let's look at the final one. Let's talk about volume. Now, remember when we're discussing volume in terms of the strategy, we're talking about three separate things. We're looking at the volume graph, which just shows you in which direction we had the most volume. So in this case, if you look right here, we had a ton of buy volume and very little sell. But over here, we had a ton of sell volume, ton of sell volume, ton of sell volume. That's really it. That's how you read this bottom graph. It just shows you, how much volume you had and which direction the primary volume was in. And then you're like, okay, so this is easy enough, but what about our order book? So our order book, what we're looking for is big sell walls and buy support. Unfortunately, Binance's BTC volume isn't as extreme as GDAX. So we're not going to have like 30, 40, 50, 60 BTC or 250 BTC walls. However, what we will see is big for the exchange. So there's a wall here for, at 10,710 of 2.73. And if we were to spend the time, I bet we can see where this is in one of our indicators, whether it be our Bollinger Band, our MACD, or RSI. Okay, so order books, we're looking for support, buy support. What's buy support? Buy support means a large amount of walls or a large wall at a specific price, and a sell wall, which means resistance, would be at our seller's area. Big, large amounts at different areas of the sell, or a large amount of different orders at different prices, but all for a large amount. So order book makes sense. Then why are we using trade history? Trade history actually lets us see what's happening. If we're selling, we see a lot of red sell, that means the price could be moving down. We see a lot of green, we can tell that the price is going to be moving up. All that together should give us a good indication of our final confirmation of where is this going to go. Now, I'm not saying do it in order. I'm not saying go Bollinger Band, MACD, RSI, volume, buy wall, sell wall. Okay, I can buy in. You might take too much time, and you don't have to do it in that order. If you're like, okay, Bollinger Band's down here, it looks like I have a lot of buy support, I'm gonna put my buy order in right here at the top of the wall, it gets filled, we're on our way up, we sell, that's valid. But when we start getting concerned about our situation, so let's put our Bollinger back in. So for example, right here, let's say we start getting concerned, right? We buy in here like, oh boy, I don't know if it's gonna go up after this. That's when we look at all our other ones. We look at our MACD, our RSI, our volume to see, okay, what's exactly going on and why are we moving down? And you'll most likely see it. A buy wall or a sell wall that's not supposed to be there, or a sell wall you didn't expect to be there. So very simple. That's how this strategy works. We look for the appropriate setup, come into the top, go down below the middle B-band line, hit up, touch the B-band line, which you'll have to hear people saying testing. So that just means trying to break past the middle resistance line, coming down, touching the bottom Bollinger Band, getting a confirmation candle, buying in, and then riding this nice profit wave and picking your profit targets. You keep saying profit targets and stop losses, but you haven't showed us how to do it. How do we know what percentage we're supposed to be getting? How do we know what values to sell at? Well, I was winging it for a while, but thankfully Mr. John Perkins created a nice Google sheet, which you can find in the Crypto Junkies pinned messages under day trading. And I imagine Jay will link it in a video if he eventually updates it or uploads this. So what does it look like? Looks like this. Fairly straightforward and easy to use. It already has the fees calculated in for the profits area, not the stop losses. And it's already set to 0.05, which is what we would be using on Binance, which I should probably cover, and I'll cover that in a bit. It's like, okay, how do we use this? Well, we're trading BTC USD, so we'll use this. This is a log, by the way. You should always use some sort of trade log to keep track of all your trades and see how you did. So we're gonna put BTC USD here. Oh my God, is it gonna pull the data? No, it's not that cool, but don't worry, it's still pretty cool on its own. Next, we would put our buy-in. It's like, okay, where would our buy-in be? Let's say we bought in at 10,830, the current price. Okay. Once we hit enter, look at that. All of the targets, all of the profit target percentages and our stop losses have been filled. So we know now that in order to get a 1% return on this trade, including taking our fees into consideration, what will end up happening is 1% is we have to sell at 10,944. That is exactly 1% return with fees included. Our 2% is now 11,052. When we say our target profit goal, that's what we hope to get from every trade that we enter. But a 1% or 2% is still good. Any close in profit is a good close. Regardless of what you might see on the charts, even if you close at 3% and it goes to 10%, you still cleared a 3% trade. Go to the next one. Don't dwell on missed profits because you still got profits. So it's like, okay, so I know that if I buy in at 10,830, I want to sell at about 11,160. And hopefully our price will actually move in that direction and we'll get it. We close at that price, we got 3%, we go and make a trade recap, which we'll explain what that is in a little bit, and we're good to go. We're on to the next trade. But like anything else, if it was easy and perfect, everybody would do it. What happens when the trade goes against us? What is our battle? What's our plan? And if you listen to Jay a lot, he's like, what's your strategy? What's your plan? It's the same thing. We need to have a very disciplined way out. We need something to look at to say, you know what? It's going against us. What are we going to do? And that's where we have our stop losses. Now, I am saying stop loss. Binance does not have a stop loss yet integrated into the software or into the exchange. It's coming. Other exchanges like GDAX or Bitfinex will have stop losses already in place. I'm pretty sure Gemini has a stop loss as well. But when we're saying stop loss, that's the price we're about to exit at. What we're looking at is 2. Our current strategy only allows for 2 stop losses, our 1% and our 2%. Now, the reason we have a 1% stop loss, that's a very tight stop loss. And if it looks like it's not going to turn around on you, then you can sell there. But it also gives you a chance to look at the market and be like, you know what? I might have just bought in a little too early. The market might still move in my favor. With this strategy, if you're accepting the 1% loss, that means you are saying, I will close for sure at 2% loss, no matter what. Now, I know a lot of you are saying, but if I wait for 3%, it might move back up. Well, yes, but what happens if it goes to 5%, negative 5%? Now you've lost more money than was necessary because you waited, you let emotion take control, and you didn't exit your trade. It's like, okay, what happens if I close out at 2% and then it jumps up to 10% worth of profit and I missed it? You missed it. By having a strict stop loss, you are actually increasing your chances of losing less money than not sticking to the tight stop loss. Now, I know what you're probably saying. You're like, well, why wouldn't I just hold the BTC till it goes up? Well, you probably are holding BTC because you're trading altcoin pairs. Unless you're willing to hold bags in the altcoin, you want to get your money back because dead money, I know I say it like that, but it's not. When I refer to dead money, it's money I cannot currently trade because it's held up somewhere. In that case, it would be if I'm holding a 5% loss on an altcoin trade I made, I can't pull that money out because A, the loss is more than I'm willing to accept, so I have to wait for that price to go back up. And you know what? If I accept the 2% loss, I can take that money and go make a 3% trade. Does that make sense? When we're day trading, we want to look at it like, okay, I stopped out, whatever, 2%, I'm going to go make a 3% trade. Now, for those who are trading their entire stack, you're not going to recover. But you never trade your entire stack. We're going to talk about positioning in a little bit. So let's go back to stop losses. We accepted our 1% loss, and then we hit our 2%, we close. If we make sure to do this on any trade we do, we will have more winning trades and more percentage in those winning trades than we should have in our losses. And if we don't, then that means we're doing something wrong. Something we're missing the setup, we're missing some of the information. You know, something is wrong. We need to reevaluate how we're doing this particular strategy or any strategy. So very simple. Go get the spreadsheet. It'll be linked in the description of the video or in the day trading chat, and just keep a track of where you're going to go. If you enter a trade, put your buy in here, use your targets, always in percentages. Positioning. You're probably asking, how do I position? What is my position? You never want to all in your trading stack. Now, granted, we're doing that right now in BTC swings, but that's a different beast. When we're doing normal trades with any swing trade or using this strategy, we want to make sure we have appropriate position sizes. A position size is dependent on whoever you're talking to. For me, one position is a 10% of my trading portfolio. Now, for some professional traders, they're gasping like, oh my God, what an idiot. But that's the risk I'm willing to accept. For other people, one position 0.01 BTC or less, 0.001. So when they say they have 5 positions, they really have 0.005 worth of a given coin. But what you're looking for is you need to divide your trading portfolio into chunks, and that's the only thing you use. So for example, I'm lazy and I click the 25% button, or I use the 10%. I put in a manual 10% order, use some math to figure it out. And what we can do is, let's say, okay, you're like, I'm a snazzy trader. I want to trade this downtrend because I want to catch the up that will happen. Well, I would take a position here, take a position here, take a position here, take a position here, and then we've got the profit, and then we can close anywhere above here for profit. Now, this is commonly referred to minimizing your dollar coin average. And what that means is you buy more positions at different prices, so then your position that you need to close above for profit is lower than your highest position order. If all the position talk got you confused, I'm sorry. But basically, if you don't know what dollar coin average is, just do a quick Google. It's pretty simple. And for a lot of people who bought at the top, let's say 11, 6, 11, 7, I don't even think we got that high. But if you bought really high at the all-time high of Bitcoin and you're like, man, I really don't know how to get out of it, you might have to use some more money to save your money at top. And the way we do that is with dollar coin average, buying more positions at a lower price to bring our higher position down so we can clear profit or break even. Topic for another time. That is the first strategy. Now, if you're watching, thank you, averaging down. Thank you, that's what I'm looking for. So you're like, okay, we've been seeing in day, if you've been in the day trading room, we generally post trade recaps, which is a bit of information regarding how a trade went. So I'm gonna scroll forever in day trading and actually try to find one of these trade recaps. Might take a little bit. In the meantime, so I'm going to use, so this is what a trade recap looks like. A trade recap shows our enter targets, so our buy-in targets, our sell targets, our stop loss, and where we actually sold. And why do we make this? It's a bit for accountability. It's a bit to keep track of how we're doing, what trades we're entering, and also so we can show others where we made our trade and start a discussion. So we entered sub BTC on Binance, and what we saw was we saw this pattern form. We touched the upper Bollinger Band, we came down, we touched the middle Bollinger Band, came back down, and boom, we saw this going sideways. MACD, everything was agreeing that we're coming in, and we took our position. Once we took our position, we set our sell target, which was 27.20, and our stop loss. So like we discussed, 1% or 2%. In this case, I believe this was I'm not even gonna try to, it's gonna be embarrassing if I get it wrong. And then, we just show where we actually sold. Now, during this time, we tested the upper middle band. Someone might've sold here. Someone might've held on because it was too quick. Test. We finally break out and, we're holding through this and talking about it. And eventually we cleared a 6% trade gain. That's pretty good for a, how long of a trade was this? That's pretty good for about a 2-hour-ish trade. This is important later on. Make some recaps, keep track of what you're trading so you can show other people, if you did well or bad. We do have trade recaps with negatives on there because that does happen. We can enter a bad position. We might jump in at the wrong time, jump in when there's bad news. Speaking of news, a nice little segue there. Fundamentals. So when you hear someone talk about fundamentals, they're talking about news, emotion, current, public opinion. So for example, Bitcoin's going to be traded, Bitcoin futures just got approved. That should tell you that, the price of Bitcoin's probably about to go up. I shouldn't be shorting Bitcoin when it just got confirmed that it's going to legally be allowed. We can't use TA to figure that out. We have to keep on track of all the news going around for any coin we trade or anything happening with Bitcoin. Because what we don't want to happen is we don't want to be in an altcoin trade like we were a couple days ago. We had 3 trades open, all beautiful setups. And then some news hit and Bitcoin started pumping. People took money out of their alts, meaning large sell-offs, meaning our positions got destroyed and we had to take a loss on every single one. That's fine because we didn't lose more than 2% across all 3 trades. So keep your fundamentals in check. Make sure to remember that is an issue. That is something we have to keep track of.